Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Friday, the 13th of October. My name is Russell Shaw. I'm a senior market specialist at FXCM, and of course, my email address rshaw@fxcm.com. If you'd like to email me, that's the email address to use. I did get an email from you, Naren, yesterday. We'll address that today. Thank you very much for sending it through. Just want to bring up the high risk investment warning. I'll keep that on screen for a few moments, and then we'll move to the market commentaries disclaimer. Hi James, good morning to you. Welcome. Thank you everyone for signing in this morning, much appreciated. Hello Raj, good morning to you. All right, let's just bring up the market commentaries disclaimer. Hey Matthijs, welcome and good morning. All right, and just finally our references, MarketScope 2.0 and TradingView. I'm just going to bring up the TradingView screen, taking a look at the real rate. So the email I received was, can we kind of definitively say, is it a risk on day or is it a risk off day? I can tell you how I think the day is starting. I mean, clearly the news throughout the day is going to affect the sentiment, and that's exactly what happened yesterday. When we had the CPI came out, it really turned the day into a risk-off day. So you have to be aware of the calendar events for the day and watch them carefully and understand what that means in terms of the real rate, and then how does that ripple through to the other instruments. You can see yesterday this is actually, it's quite an unusual candle. This blue candle, it's actually called an outside day, and you can just see that it opens below the close of the previous day and closes below the close of the previous day. So the outside day. So a strong increase in the real rate. Well, if you're going to get a strong increase in the real rate, that's probably going to act as a headwind on the risk markets. Another chart to look at, which I think is quite interesting in terms of risk off and risk on, is actually the relative strength chart between the NASDAQ 100 and the S&P 500. And generally, if you get an outperformance in the NASDAQ 100, I would expect pressures to be building in a risk on. It's just a sort of a general underlying type of signal. It may not be prevalent every single day, but if you take a look at NAS 100, excuse me, NAS 100. Okay, and then what we're going to do is we're going to divide the NAS 100 by the SPX 500. And what you can see here, well, it looks to me as if there is a clear outperformance by the NASDAQ over the S&P 500. The EMAs are in bullish mode. Just something that does seem to be suggesting caution. Something that does seem to be suggesting caution is, of course, this overbought condition. Let's just make this a green border, just be easier to see. So you can see we've got this overbought question. In other words, perhaps Nasdaq starts underperforming SPX for a brief period. Couple that with the fact that the real rates have that bizarre outside day up, maybe we see some sort of risk off element come in, just as the RSI for the relative strength graph normalizes. But if you go through to, say, the weekly here is looking, I think, rather bullish overall. And I think that we're going into Q3 earnings today. Delta came out yesterday, but really it's the banks that are regarded as the kickoff of the earnings season. We're going to get the banks today. Look at the earnings. Potentially, I think Q4 does have an underlying bullish current to it, albeit that there may be some sort of element that we've got to get rid of over the next sort of few days. That we can see the Nasdaq 100 daily chart. Sorry, the relative strength of the Nasdaq 100 and the SPX on the daily chart looks a little bit frothy, and we got that kick up in the real yields. Why did we get that kick up in the real yields? The inflation came in slightly stronger than expected, and the idea is that higher for longer narrative came really back into focus. So I hope that helps. But we're going to have to play it, but yeah, every single day. Right now, okay, let's just go back to the real rate, which is the US 10-year minus the break even. Okay, which is the same as if you guys ever hear of TIPS in the media. TIPS, Treasury Inflation Protected Securities. I think that's what it stands for. That's a TIPS. That's what we're looking at now. All right, just go through to the daily here, and just this little bit of a kick up. Now, so this really hammered the markets just in late afternoon. We do get some red coming through now. So, wait a second, it really pushed up. Maybe there is a little bit of moderation coming in. Go through to the weekly. The weekly chart seems to be correcting from this overbought condition. So let's take a look at the US dollar and see how it's setting up for today. All right, so let's just go ahead. Let's go through to US dollar. And you can see that yesterday the US dollar really drove higher. Okay, why did it drive higher? It drove higher because of that outside day for the real yield. Remember now, we've got that little bit of froth on that relative strength chart, which needs to come down. So maybe the fact that the greenback has pushed higher is something that we need to respect. Okay, so going through to the weekly chart, it's changed up completely since the CPI announcement came out yesterday. We were looking for a reversal, a key reference candle here, which is effectively a reversal. We had condition 1, which is the highest high. We had condition 2, which is price taking out the low of the reference candle, but we've lost condition 3. Okay, so it doesn't look as if we've got that reference candle here anymore, and there's actually a buying tail that's come in on the US dollar. Okay, remember that's coupled with that outside day on the real rate that's pushing up, and we've got that overbought condition on that relative strength chart. So it seems to me there is a bid in the risk off side of the market to start the day. Does it maintain throughout the day? I can't tell. You're gonna have to monitor that. But it does seem that we're starting off the day on a risk-off footing. So we go down to the daily chart here. It's pushed right back into zone 1. It's pushed right back into zone 1, and we're getting a little bit of red there. Okay. So let's just clean this up. Take a look what's happening here, guys. 1, 2, 2, 3. Okay, and now it looks as if we're getting the bullish crossover in the EMAs. We just will see if we get figure 2, a bullish crossover in the stochastic. Now, if we get those two, it doesn't necessarily mean we get a full-on swing in the US dollar. But if we get through to the upper quintile and hold, then I suggest the probabilities are that we get a swing in the US dollar. And if we get a swing in the US dollar, again, probably suggesting that we have some sort of risk off day. Now, let's just put the labels in. Okay. 1, 2, 2, 3. Okay. Just to show you guys what I mean in terms of the labels, I'm going to bring up Microsoft Paint again. Okay, and the markets don't move in a straight line; they zig and zag. Okay, they zig and zag, and then what we're doing is breaking those down into wave 1, 2, not Elliott wave, just impulse wave 1, 2, correction wave 2, 3. Once we have completed correction wave 2, 3, then it becomes a 1, 2 again. And then it becomes a 2, 3. Once that 2, 3 is completed, it comes the next impulse. So what I'm suggesting is, if we go back to the 1, 2, 2, 3, and then possibly the next 1, 2 here, okay, because of that inflation number that came through, because that relative strength chart seems to be overbought. Now remember, when those correct, I think that Q4, the rest of October, November, December, probably has some bullishness to it. Now listen to what I'm going to say next, subject to correction. Okay, because we're going to monitor it regularly, so subject to correction. All right, let me just see if there's any comments that have come up in the meantime. Is this then possibly the end of the counter trade? It could be the CPR up, dollar up, yeah. So I think right now, Raj, the sentiment is risk off, subject to correction. And if we do stay higher for longer, then yeah, then it's the end of the counter trade. But let's not predict, let's react, let's monitor this every day. Okay, does that help? Just let me know. James, CPR up, dollar up, does that make sense to you? Just let me know. Okay, cool. All right. Thanks, Naren. All right. Now, if we're getting dollar pushed up, I would expect pressure on euro, pressure on cable. Let's just take a look, see if that's the case. Let's bring up euro. Okay, take a look here. Here is euro. Let's just take a look at it in terms of a daily chart. All right, it's big drop, big engulfing candle to the downside. It's in zone 3, it's on the border, but if we really strict, if I zoom in, we are in zone 3. Look, it looks to me to be a 1, 2, 2, 3, and then you can see the crossover. Okay, and then if we get a crossover over on the stochastic, that's the second trigger. So it does look like a change up here in terms of the risk from what we were talking about 24 hours ago. And Kim's not on the is not on the webinar today, but he asked, should we wait for the CPR number to come out? And I said prudently, we should probably wait because it makes a world of difference, and it has made a world of difference. We've got a different sentiment bias at the moment. Okay, it looks as if we're getting the EMAs to push down. If we get the stochastic to cross down, and then we get a movement into the lower quintile, then we can potentially get the next 1-2 down. All right. Let's just take a look at cable. All right, let's clean this up as well. Clean that up. Clean that up. Yeah. Okay. Good. Now again, it looks like it's a 1, 2, 2, 3. Okay. But we need the signals. Signal 1, trigger 1, trigger 2. Is that going to guarantee the swing down? No, it's not going to guarantee it. But if we get a movement towards the lower quintile and it holds there, that would increase the probabilities that we get an impulse move to the downside. So again, just to emphasize, it looks like dollar supported. If dollar supported, then euro cable under pressure. It looks like there's this risk off sentiment that seems to be taking hold. Well, let's take a look at DAX. Let's take a look at DAX. Let's clean up as well. So what have we got here? Let's go through to the daily. It's in no man's land. It's still neutral. Okay. There is a big red candle down yesterday. Neutral is difficult because we're kind of in that congestion area. It's easier to trade in a zone 1 or a zone 2. Nevertheless, if we go down to the hourly chart and we link it up with our hypothesis about the rising yield, it becomes a little clearer, and you can see that the EMAs have crossed to the downside and they remain in bearish formation. And then take a look at the stochastic. The stochastic looks like it's about to drop down, and if that's going to drop down, sorry, I got the wrong arrow there. Let me just then we want to see if we hang out in that lower quintile. Do we hang out in the lower quintile? That makes the world of difference. If we get across up here, and if we get across up here, well then, look for it obviously to go towards the 80 plus region. But my opinion is we don't predict, we react here. It does look as if the currency market is suggesting some sort of risk off environment. If we see that risk off environment, then I would see if we push down into the 20 minus areas. Okay, the cash market has just opened. There are a lot of limit orders being hit now. There's a lot of algos that have kicked in. So the first kind of hour is usually quite fuzzy, but we'll see how this candle looks. Again, and if we get a cross up here, just bear in mind here is resistance. Okay, so just be very careful. It's a tough trade. Why? We're in the middle of zone 2. All right. Let me just see if there's any other comments there. Guys, that's as far as we'll go this morning. Nothing on fundamental news today. It's a good question. I think there is University of Michigan. Let me just double check that. Yeah, so University of Michigan comes out today. So we'll see what consumer sentiment is. That's 4 p.m. ZA. That will be 3 p.m. UK. In terms of news overnight, China continues to show signs of disinflation. Okay, so I think that's adding to the risk-off sentiment. And I can also see that at 10 a.m. ZA, which will be 9 a.m. UK, there's Governor Bailey speaking, but I don't think that's going to move the market. Okay, I don't think that's going to be a market-moving speech. All right. All right, let's wrap up here, guys. Thank you very much. I want to wish you guys a good weekend, and we shall speak on Monday morning. Thanks very much, guys. Cheers.